Hi everyone, I'm here today to talk about the 5 things high income earners must know about the new tax Biden plan proposal. Number 1, we have ordinary income tax rates. Those are proposed to go from 37% to 39.6%. That is huge. So what is ordinary income? It's interest, dividends, W-2s, Social Security benefits, and pensions. Basically anything that's not long-term capital gains or qualified small business stocks. So the proposed changes would apply to taxable income for individuals making over $452,000 a year. Head of household individuals making over $481,000 a year. Married individuals filing joint making over $509,000 a year, and married filing separate individuals who are making over $254,000. Prior to 2017, the top tax rate for ordinary income was at 39.6%. Biden's proposal wants to roll it back from the 2018 changes, reducing it to 37%. That's a 2.6% increase in your after-tax dollars that is no longer going to be available to you. So, significant haircut in your total disposable income annually. So you need to meet with your tax advisor, professional CFOs, all of the individuals in your financial camp to help you understand how to defer some income and reduce you hitting into that top tax break. There's money to be saved if you plan accordingly. Number 2, long-term capital gains. Many individuals, especially high net worth individuals, really benefit from this tax strategy called long-term capital gains. So, long-term capital gains are for any asset that's held for more than 12 months and a day. Those tax brackets or those particular assets that are sold are then taxed at what is called a long-term capital gains rate. And the max capital gains rate currently is 20%. Huge win for investors. Many people take advantage of this tax benefit because of the lower rates relative to what we just showed you earlier is ordinary income rates at 37%. Huge win, right? Well, the Biden proposal is going to change or would like to change some of that for income earners over $1 million. So currently, long-term capital gains have no cap on long-term capital gain income. So you pay a flat max 20%, and in the Biden proposal, that would all change. What would change, you ask? Well, anyone making over $1 million would now be subject to the ordinary income tax rate, which possibly could be upwards of 40% based on what we just discussed in topic number 1, being that Biden's proposal would like to move the 37 top tax rate to 39.6. It's a huge, huge tax change. So everyone, if you have long-term capital gains, you need to start thinking ahead and think about your long-term, short-term holds. What makes sense? Is it advantageous for you to do this in the 2021 calendar year with the proposed changes going into effect 2022? There's a lot of details that need to be considered, but you should meet with your tax advisor professionals to discuss what is the best option for you to reduce your tax liability. Now, number 3. Net investment tax. So what is net investment tax? Net investment income that qualifies under the net investment tax is capital gains, dividends, interest, and some mutual fund distributions. Now, the 3.8% net investment tax on that particular type of income is used to help fund Medicare and Social Security. Currently, individual tax filers that file single that receive over $200,000 of income now become subject to this additional net investment tax. Married filing joint filers under the current tax law receive or are subject, I should say more clearly, to the net investment tax of 3.8% when their income exceeds $250,000. Now, one would say this is a double taxation, but we will not go into that here. But the Biden change on this net investment tax is recommending that net investment income over $400,000 will now be subject to ordinary income, which we just talked about in the earlier point one, that ordinary income tax brackets are now potentially going to change to almost 40% versus the current 37%. So for those of you who have net investment income and fall in that $200,000 to $250,000 of taxable income where you're subject to this net investment tax, you could be looking at a huge cash flow cutback of after-tax dollars if this net investment tax for those making over $400,000 passes. So what do? You meet with somebody like myself to get advisement on how to defer these types of income so that you're not subject to an additional almost 40% of net investment tax on anything over $400,000. You need to call someone, or you need to call your tax professional and meet with them right away so you have a plan that is proactive, not reactive. Now we come to point number 4. 4 is self-employment tax. Those of us already pay it who are W-2 employees via your payroll wages, and your employer also pays a portion of that for all income that is up to $142,800 in self-employment earnings per year. What does it fund? Again, Medicare and Social Security benefits. So in the current tax law, we pay 15.3% in self-employment tax. That's 7.65% that you as the employee pay in self-employment tax, and another 7.65% that your employer pays on your behalf for income up to $142,800. After that, you and your employer are no longer subject to the self-employment tax under the current tax rules. Biden is proposing that high income earners, those who make over $400,000 a year, be subject again to the self-employment tax rate of 15.3%. That means that you, as a high income earner, will be paying an additional 7.65%, and your employer will also be paying an additional 7.65% on your behalf in self-employment taxes. That is a huge, huge cost for both the employer and you as the individual taxpayer. Something to think about. We need to keep this in the forefront of our mind. There are opportunities to defer income, but you need to meet with your tax professional to discuss those options as well. All right, number 5, like-kind exchange. What is a like-kind exchange? Well, for those of us who are joining, who are real estate investors, you're going to know really well what the like-kind exchange is. A like-kind exchange allows you to transfer capital gains in an asset held for over 12 months into a new asset that is equal or of greater value and defer the tax. This is a huge win for most individuals who are investing, even if you're investing in a small rental property that's just a single family residence or a multi-unit building apartment. You're allowed to kick the can down the road, reinvest in yourself, and pay 0 taxes under the current law. Of course, there are a lot of variables that you have to meet. That's why you need someone like myself to figure that out. But in general, that is what a like-kind exchange is. Under the Biden tax plan proposal, this would change with a $500,000 cap in like-kind exchange deferment in taxable capital gains. Wow. That for some investors makes a complete shift in their tax planning and investment strategy. So meet with your tax advisor because this is a huge one for those real estate investors who are very used to taking advantage of this current tax law that is out there to help reinvest in our economy. So, for example, if I purchase a $3.5 million apartment building today, I hold it for 5 years and I sell it for $5.5 million, and I find another building of like kind, so meaning that it has to be for business use, I am able to take that gain and defer it into the purchase of the new building. What does that save me? That saves me over 40 to 50%, maybe even 60%, depending on all of the additional tax changes in Biden's proposal and depending on the state in which you live in to defer for future years to come. So everybody needs to understand this is a huge impact to your financial decision-making and investment decision-making. And should this pass, my phone is going to be ringing off the hook. So just to recap on this like-kind exchange. 1, currently there is no cap on deferment of your capital gains as long as you're buying an asset of like kind that is equal or greater to the asset that you're selling. 2, Biden's proposed tax plan on like-kind exchange change the rules that currently have no cap on like-kind exchange capital gains deferment to a cap of $500,000 for a married filing single individual and $1 million for a married filing joint filer. So those $2 amounts are important when you're thinking about potentially selling a long-term asset in business or in purchasing a new asset for your business. Keep those in mind. Again, this is a proposal. It is not in law yet, but should those changes happen, they're going to be a significant shift in decision-making for our real estate investors. So here's a quick recap on the top 5 things high-income earners should be aware of under the Biden tax proposal. Number 1, top ordinary income tax rate changes, increasing, of course. Long-term capital gains, another increase, but there's variables. Net investment tax, self-employment tax, and like-kind exchanges. So, what did you learn today? Which of the tax Biden proposals will affect you the most? I'd love to hear from you. Please like our page, comment below, follow me on Instagram, Erica Rene Martinez. We're here, Paragon Accountants, to help you build your financial legacy. Thank you. We look forward to hearing from you soon.